Testing. Welcome everyone to Blockchain Professionals 2021. Yay! It's good to have a meetup in person after a year, pretty much a whole 2020 of live streams. Although we are live streaming, hello to everyone watching from home or the office, all parts of the world, maybe Brazil. Hi. I'm Adriana. I work with web development, digital marketing, and project management at Prismatic. Rob here is also working at Prismatic. I've been organizing meetups since 2015. It has been awesome seeing this community grow over the years. And you know, our community is one like no other. We share what we know, we share what we learn, we help each other, we hire each other. So events like this are for that, so we can get to know each other. And this is not just in Sydney, the blockchain community I'm here is like that everywhere, so good on us. If you don't already know, this meetup has a spin-off podcast. It's called the Blockchain Pro Podcast. People working full-time in the blockchain space. It's quite fun. Anna has been on it. George was episode number 1. We'll get to that in a little bit. Thanks to Tim from Blockade, who's sitting in the back, for organizing the space for us today. Thanks also to Edge Wallet for their continued support. We love their work and their passion for helping communities grow everywhere. For anyone watching online, you find the links to everything that I just mentioned in the description tomorrow. And let's introduce our amazing panelists. Right next to me, I have Hannah Glass. Then I have Rob Morris, Aimee Maree Forrstrom, and George Samman. Welcome, everyone. I would like you all to just briefly introduce yourselves, and then we jump to the questions. I'll start with you because you're next to me. Thanks so much, Adriana. I was actually thinking, the last time I sat on a panel in a room where there were people was this same conversation a year ago. And I don't think anyone predicted that it would be a year between meetups. So we're definitely, things have changed a lot the past year. But for those of you who don't know me, I should probably introduce myself. My name is Hannah Glass. I'm a senior associate at King & Wood Allison's, which means to my sins I am a lawyer. I have been in this space for quite a while though, so my practice was traditionally in the regulatory sphere, and then as the advent of Bitcoin started to collide with traditional regulatory spaces and people were trying to work out, is it money, is it a financial product, how does this work in Australia, how does it work internationally, I sort of fell down the rabbit hole. And so since then my practice has expanded into primarily now everything to do with blockchain, fintech, the application of new technologies to existing systems. And we work with everyone from startups all the way through to ASX 200 companies. And one of the exciting things I've been able to be working on in the past year is actually I sit on the Australian government's or the Department of Industry, Science, Energy and Resources National Blockchain Roadmap Steering Committee with it. And within that I also share the RegTech working group, and we're actually currently consulting on changes to law in this space or barriers to entry into this space. Primarily the focus is where can blockchain or DLT be used to facilitate legal regulatory compliance and to assist with meeting those obligations. I'm really happy to talk about what's going on with the roadmap, what's going on with the RegTech working group more generally. But I think you've probably had enough from me for the moment. Let's hand over to Rob, who's on the working group, actually.
You get it on mic. my name is Rob. I'm the CEO and founder of Prismatic, which is a technology consulting company. I started messing around with Bitcoin. Actually, I first read about it, I think the day that the white paper was released, which I'm still pretty sure was actually 2008, which is a controversial opinion, but that's just what I remember. I've been meddling around with that for a long time. My day job is what I call traditional disruptive technology, not just blockchain and cryptocurrencies. I'm an investor, advisor to a bunch of companies, both blockchain and otherwise. I contribute to things like the blockchain roadmap in my own way, and I bring a lot of different lenses. But my professional background primarily is as a technologist, as a programmer. These days, very inexpensive junior executive who's actually still writing code. That's enough about me.
Hi, my name is Aimee. Through my origin Bitcoin, I was amazingly introduced to Bitcoin in 2012 by Miyazaki, who was the original Bitcoin developer. Yes, Gavin only helped here. So I've kind of been into it for a while, and I was also into M-Pesa and SMS kind of currency stuff beforehand. I have my own company, but it's basically just researching at the moment and probably watching some green candles going up and down. Yeah, but apart from that, I'm very positive about the space. I think it's pretty amazing, and I think it's probably been open source for 2 decades. I'm an old greybeard in that space and well known in that space. And I think definitely the Bitcoin crypto community is probably the most diverse community that I've ever come across. And also, when it comes, probably one of the most fun. I think we're all in it for all different reasons, and I don't think that anybody really kind of carries too much of that reasoning when it comes to crypto, in the sense that we all kind of just get along and get down with it and get our hands dirty. Thank you.
Hi, my name is George. I have been working in the crypto sphere since 2012. I co-founded a company back then called BTC.Sex, which was a way of trading with leverage on longer short grips Bitcoin. Didn't work out very well in some ways because I was in New York and the bit license came in, so I started doing consulting work. And since then, I have been working with many companies, wearing many different hats. If you go to my website, you can see a lot of the companies I've worked with, a lot of the papers, some of the blog stuff I've done. And recently, I've just been really investing and advising in the space. So I guess what I can bring here is that I'm purely in crypto since 2012, working, know lots of people, invest in the trends, trading it, and advising lots of companies that are looking to raise capital or already exist and have raised capital. And that's all I really look at. I don't even look at anything else really, like traditional stuff. I have no idea what's going on in those markets anymore. But I've known Adriana probably that long.
Probably.
Yeah,
since like Australia.
Yeah, that's it. The Bitcoin meetups and whatnot. Yeah. So wow. Yep.
All right. So we're gonna talk about a few different trends this evening, and I'm gonna kick off with some questions, and then I'm gonna open for you guys to ask questions about the trend, and then we move to the next trend, rather than just have a Q&A at the end, because that way we sort of structure this a little bit better. So trend number 1, let's talk mass adoption. Bitcoin market cap is about 1 trillion. Everybody's going bananas about it. James Litton has submitted this question on meetups.com. How will Elon Musk buying 1.5 billion Bitcoin change blockchain perception? And I'm going to throw this to you first, Rob, because I know you really want to talk about it. So go forth, and then everybody can jump in afterwards, and we can take questions as well.
So the Tesla thing is a really interesting move, and I think it's very clever by Elon Musk on several levels. But instead of talking about why what he's done is clever, what I'll talk about is what I think it means for the cryptocurrency markets and adoption generally. So as a large and well-respected corporate, what they've effectively done is open the floodgates for other corporates to treat Bitcoin as a legitimate inflation hedge or a legitimate asset to have in the balance balance sheet. And it also forms part of a larger trend of companies directly buying exposure to Bitcoin and then selling that exposure on regulated markets to companies that can't otherwise play due to regulatory restrictions. And so you've seen MicroStrategy was earlier than Tesla, and they're seeing a lot of investment interest due to that Bitcoin holding directly. Tesla is also somewhat riding on this wave, but what's very interesting is that it really legitimizes that as a strategy now. And so what I think you can see is a lot more corporate purchasing of Bitcoin happening. That is also hand in hand with institutional investors, and the more institutional and corporate do it, the more legitimate it becomes. And so I think when you boil that down, right, that doesn't necessarily usage adoption, or it doesn't drive you is a regime shift of cryptocurrency markets that are no longer as likely to be driven by retail investors alone, but by the steady, consistent pressure of large companies regularly buying cryptocurrency. And so I was saying this to somebody, actually a couple of people earlier today, that I think both of those markets coexist now. Right? You've still got the retail and the cryptocurrency market that we all know like with its very volatile ups and downs, and then we've also got the institutional market that's perhaps a little bit more predictable when it comes. So who knows how it's going to play out? It's all very fresh territory in the short term, but I think in the long term it's pretty easy for the direction it's going to go. So that's my opinion. How about you guys?
So I think 100% everything that you said. What we're seeing now is mass corporate adoption, and we're not going to see that happen in one day. We're going to see it happening in 1 week because companies have to file papers, they have to go through the SEC, etc., etc. So we're going to see this slowly ramp up over the next couple of months. Right? Just to give you an idea, I was talking to a friend of mine who does an event organising in the USA space. After Elon said that, you could roughly estimate around about 7,500 sign-ups to corporate online webinars on how to invest, get Bitcoin onto your asset books, right? So I think that's a pretty clear sign there. When mass adoption, that's one side, right? And I think we covered that pretty good. On the retail side of things, I think what you're going to see is, so we look at past bull runs, they're really driven by the retail sector. What we're seeing in this is driven by the corporates. So BTC at the moment is pretty much driven by the corporates. I think a lot of retail investors are going to look at that 50K USD above price point and think, I can't do this, and I'm never going to do it. So this is why you're seeing a lot of activity in the alts, right? So you're seeing normally you have Bitcoin go up and alts go down. What you're seeing now is Bitcoin go up, alts go up. So you're kind of really seeing that, and to me what that is saying is the retail investors are getting a bit more savvy with this as well, right? So they're actually getting on there and they're having a look at a lot of things like, your Uniswap stuff and your sushi and that, and I think a lot of the retail investors are getting in that. One more thing I'll add on mass adoption is ETFs. So Michael Saylor and Elon Musk and all those can, feel confident to go onto a crypto exchange and buy that. But a lot of other people aren't going to. So now that we're getting Canada, and I believe Australia is getting one as well, I think that's where you're going to see the retail move to the Bitcoin, right? So it's going to be your mom and dad investors at home whose broker or who decides that they need to put the 10% or the 20% of their investment into crypto, and they're going to do that via the ETF.
Yeah, I guess I could add something. You guys have all said it pretty well, though. But so again, agree with most of that. But I would add that I think from the retail perspective, we've seen, particularly what happened with GameStop, the whole entire Wall Street specs crowd has come over into crypto now as a result of that. There's been lots of crossover. Lots of crypto groups have kind of been talking, setting up channels so that the Wall Street Specs crowd can now be involved in crypto as well. So when you're talking about the retail players coming in, looking at altcoins, I think you're right about that. The other thing I'll say too is yes, Bitcoin is super expensive, which makes it a difficult proposition for a lot of people to buy, because a lot of people don't like to buy point X of something and they think 200,000 is a very big price, and psychologically, people always look at expensive things and don't want to buy them because they don't realize that they're probably the things that you don't the most. But the other point is that Bitcoin is now becoming super mature, and it's a lot harder to make it go high and very quickly. It's very heavy, right? So like a lot of people look at it and say, even if it goes to 200,000 from here, that's only a 4x. Then you're looking at things that are in the alt markets that are just skyrocketing all over the place, and a lot of that is just basically repricing of assets. Like, why? Because like DeFi is now competing with traditional finance, and like all these things are actually real world use cases where in 2017 you had all these ICOs that were air. There's like total value locked up in a lot of these things that are approaching billions and billions of dollars. The whole entire financial world is being reinvented into DeFi, not just yield plays. Now you're seeing options come in. FX is going to be next. Like lots of different things, like everything you can think of, right? So that's one side of it. The other side of it, there's lots of other stuff happening, like NFTs and digital art and all that. Like there's a whole big market here, and virtual reality, like digital land, like buying and selling stuff in the digital world, right? And it's huge. I mean, as you can see from like gaming and stuff, people pay tons of money for skins and all sorts of stuff in video games, and that market is just now being transformed on using blockchain and other type of stuff. So, like a lot of it is that it's not just Bitcoin anymore. And while Bitcoin is the store of value and digital gold, whatever you want to call it, it does have challenges. Like Rob was saying before, to get to mass adoption and actually to be useful, you need to also be a medium of exchange. And there's nowhere in sight, like when people say it's going to compete as a reserve currency, it has a problem doing that right now, because why are you going to sell this thing when it just keeps going up in price and it's so valuable? Like, why are you going to buy a cup of coffee of it? Ethereum is actually starting to get into the same place where it's becoming problematic for that. So it's the store of value for the whole entire DeFi system. But it has other problems. We'll talk about that later. But anyway, my point being is that the market is way more mature now. This could be a more sustainable rally. And also, there's lots of assets out there that actually have value because they're doing real stuff. It's not just Bitcoin as this asset and then everything else is air like it was in 2017. So, yeah, that's my whole point. Really.
I just wanted to say something which is possibly slightly unpopular. And I am saying this partially to play devil's advocate. If you look at the price and the volatility in the price of Bitcoin, that includes how quickly it rises. It does mean that it's not a particularly good store of value, because you don't know whether what you hold today is going to be the same tomorrow. And in fact, if we look at what's happened, this year it's gone up, it's basically double or triple the price, which means actually that's not a good store of value. You know that the money that is in your bank account is, however, yes, there is inflation, yes, it's incredibly low at the moment. That also means it's probably going to be worth about the same amount of money tomorrow. Now, from an investment perspective, if you're looking at how am I going to make as much money quickly, putting money in your bank account, you're probably not going to make a huge amount of money quickly. But if you're talking about what do you actually want to do, I think there's something to be said that this is still highly speculative. People do not view this, and I wouldn't even look at the companies that are getting into this space, are viewing it as an alternative to gold, an alternative to reserve currencies, an alternative even to options and futures. They're looking at it as something completely different, and it is even more speculative than some of those crazy financial products that brought down the financial system with the financial crisis. I'm not saying don't touch this. I'm not saying it's not a great opportunity. I'm not saying it's not really interesting and innovative and there's some really incredible stuff happening with the technology. I'm just saying that talking about it in the exact same way, thinking about it in the exact same way that we think about bonds and shares and even futures, it's not. And if we look at even the market cap, it's still not comparable to, say, the international derivatives market. Who knows if it will get there in 10, 20, 30 years, but yes, there is certainly more mainstream adoption now. Yes, this is getting more headlines. But we've been saying it's going mainstream since probably about 2016, 2017. It's still not quite there, and it probably
No, I didn't say it. I said it in 2019 on the stage over there. First time I said it, sorry. There was a whole bunch of people in 2017 who thought it was, but once again they learned that was a lot more recalculation. So you mentioned an interesting point there, right? So let's take we're living in, and I'll just cap it off. We are living in a very different world, all right? when COVID happened, a whole lot of people were stuck at home, and guess what they did? They learned how to trade. That's what they did. Kids are learning how to trade, right? Day trading and trading has gone from the ivory towers of Macquarie Street to the homes of your Blacktowns and your Richmonds, right? And your Bondi's and wherever else, right?
And I just crypto, look what happened with GameStop.
This is it. So now, what Tesla's done is, let's have a look at it there. I'll just put this out, and once again, playing your games devil's advocate. Okay, so Tesla's stock is pretty high. A lot of Americans have Tesla stock in their 401ks. Tesla now has BTC, which means a lot of Americans have BTC in their 401ks. So effectively, the American dollar could slightly be being propped up by Tesla and Bitcoin.
Comes back to my
So if Bitcoin crashes, how much does that impact that now? So some people say, 100K was going to hit it when USD crashed. But we're seeing 73K in Australia right now. We're not that far off 100K. What if it's the opposite now? What if Bitcoin's become so institutionalized now that if Bitcoin crashes, it takes down a hell of a lot of the institutions and impacts the USD dollar?
That would make sense if we didn't have options, which we do. And we've had those for about 3 years now. So there is a way to hedge with those large organizations, the ones that actually are buying, because those aren't available to retail clients. So that's part of potentially, and this is part of the reason why when they came out, people were saying they're a game changer, is because it does open it up to companies to be able to say, I can invest and hedge my position to make sure I've covered my loss.
And we've got interest, maybe the interest rates
I was just going to say, sorry.
We're just having a sound.
I mean, is it surprising really that we are where we are right now, like with every single asset in the world rising because of the amount of money that's being printed globally?
Yeah.
This is part of the reason why like everything's going up, except for everything except for dollars, right? So I'm reading this really interesting book. I actually just finished it called "When Money Dies," and it's about Weimar Republic in Germany. And when they had a hyperinflationary event, right? And in that instance, we're not in hyperinflation, but debasing dollars is happening. The money printing is wild, right? It's the biggest in the lifetime of anyone in this room. So anyway, what were people doing in Weimar Germany when the dollars were being debased and they were going to the millions and millions of printing presses were running? Same exact thing that people are doing during COVID. They're taking their stimulus checks, they're taking their money, and they're putting it into stocks, and they're gambling. Why? Because stocks are going up faster than the rate that money's going down. So what are we seeing again here? Well, yes, we're seeing some speculation it's across all markets, but that's what everyone's being told to do by every central bank in the world, is to put your money into things that are going up, right? And that's what's going on. So are things overvalued? Maybe, maybe not. But the thing with Bitcoin is, and this is why I personally am surprised, being in the space for so long, we've all been talking about for a long time mainstream adoption, waiting for all these big companies to come into it, waiting for the banks to embrace it, and now they have. But not only are they embracing it, like Rob said before, whether you want to say it's a store of value or not, or whatever you want to call it, they're using Bitcoin as a hedge against their own treasuries, which are completely in dollars of some kind and other types of things. That means that they, for some reason, and I'm not going to speculate what Michael Saylor, Elon Musk is in their heads, even though I probably think I know what it is because it's the same thing that, like, why I'm in Bitcoin, right? But they think that it's a good hedge, and they think that there's something sound about it, and there's scarcity to it, and they can wrap their head around the fact that it has some kind of sound money behind it, whereas dollars don't. And it took a long time, I'm sure, for these guys to actually get to that point, but they had gold that they could look at too, and they never once, in the whole entire time that gold's been around, said, we're putting gold into our treasuries. They decided they were going to put Bitcoin in. And that is very significant. And not only that, you start to see banks, financial institutions, everyone else. So I think you also have a great point around the institutions are, probably there's a bottom on the price of it, because the institutions, every time it starts to go down, it's just getting bid up. And retail cannot soak up that kind of liquidity anymore. They used to be able to do that in 2017, but there's a different narrative now.
Anyone have questions on this topic? Everyone has questions on this topic. Okay, you go first, Jared.
I got a question. Playing devil's advocate. I didn't trust me. I'll give you 400,000 reasons why. If you're going to say if you came back from the future, let's just play along, and you know that the stock market and everything is going to crash in 5 days, everything rock bottom, and you have two choices to put in your house for you and your family or loved ones, whatever, for investment. You have gold, you have Bitcoin. Which one would you choose? Why?
It has to be Bitcoin, because gold can be seized by governments.
Yeah, I'm maintaining Bitcoin.
And it's portable, and you can take it with you. So the other story about the hyperinflationary event in Weimar, Germany, and in other hyperinflationary events that happen around the world, when there's crashes and when governments need to become restrictive, is they don't allow you to access things that are yours, or they take them from you, or they devalue them so that they're not competing with the dollars that they're trying to print. Bitcoin is different than that.
So you would choose gold.
I would choose digital gold.
No. To add to that, it crashes, but also then with that crash that you have, then technology would more likely crash also doing that. You would still choose Bitcoin.
Yes, it's anti-fragile.
No, you can. We'll talk later.
What technology are you talking about that's crashing anyway? Like what?
Anything man-made can crash. Anything that you have out there now can be cracked, regardless.
Oh, you're saying like quantum computing?
No, I'm not saying that. But quantum
Okay,
computing.
Rob wants to chip in.
You choose Bitcoin. You choose digital gold.
What do you choose?
What would I choose? I would choose gold.
We'll take that to the pub, Jared.
I would choose
That
gold.
sounds like a great conversation.
Oh, yeah.
I was going to ask, do I have to choose like one or the other? 100%?
You can choose whichever one you want. The reason why I'm asking that is just one to give, like if I was just to come off the street and not know anything about blockchain, Bitcoin, crypto, anything like that, and looking to invest, because of society, the way that we all grew up, we want something tangible. So we want either gold, silver, platinum,
Do I
whatever.
have to choose one or can I
Choose whatever you want.
Okay, so which would I choose and why? I choose at least 80% Bitcoin, 20% gold. Gold's highly manipulated and also very easy to seize. So I bought a bunch of precious metals from a certain mint at one point earlier last year. It took me 4 to 5 months to get my hands on the physical metal because there was a massive run-up of Coin's contract and we was putting out 7 tons of gold a week. 7 tons of physical gold a week. And so getting your hands, it's like getting your hands on a KYC exchange account in a crypto bull run is about as hard as getting your hands on physical metal in a bull run, right? Like they're both really hard. So you have to look at the different risks of both of these things. Neither of them's great. One of my favorite stories was a guy who was captured by the Viet Cong and gave away a 100-ounce bar of gold for a bag of rice and said he was got the right of the exchange because he got the guy that bought the gold didn't. And so if we look at all the systematic risks that exist that differ from Bitcoin and gold, gold can be physically seized, there's precedent for that happening, there's precedent for that being justified for the people who hold large amounts of precious metals being witch hunted by the degree to say like these people are actually part of the problem. And so it is quite credible that in a very extreme event you might have your gold taken, but we have to be pretty clear that that's a very extreme situation, right, that we can get into for that to happen. So what's materially the difference between holding some physical gold, for example, holding some gold in Burton that has 100% government guarantee? The big risk left there is whether the government's willing to seize your gold. If we're in Australia and the government's willing to seize our gold, we're living in a very different Australia, right? So what's the percentage of your asset holdings when you're hedging against that risk versus the percentage of your asset holdings when you're hedging against, for example, inflation versus the percentage of your holdings when you're hedging against the manipulation of the gold markets internationally, etc. And so I think in the end, right, like there is no silver bullet. Like Bitcoin has technical risk, we treat it a little bit like a meme, but there's theoretically possible ways to tap Bitcoin technically. It's not like a stock on the stock market in that sense. And so to what degree are we worried about that risk happening? Is the degree to which we should account for it in our hedging strategy. So hopefully that will be that.
One more question before we move to the next. And
I'll debate that with you in the pub, John.
We can.
My question is, currently, what is the, from government perspective, what is the Australian government doing right now in terms of, let's say, the roadmap, as you are connected to doing that with the government space?
So I do represent the Australian government, and also I'm not a lawyer, so I can, express my opinions a little bit more. So all I'm going to talk to is my perspective of what the Australian, my perspective and opinion of the Australian government. I think the Australian government's doing actually a bona fide fantastic job at the moment in a lot of ways. There's very much, from an outsider's perspective, a sort of a Team Australia, this is a term they use in the government, Team Australia feeling. I see a lot of people willing to change their opinions and look at new things and look at ways in which, as a country, we can succeed, and I think that's really important. The global stage is changing quite a lot at the moment, and Australia's future prosperity and security is far from guaranteed in that changing world. So there's been a lot of support and a lot of interesting programs. The Australian Services Roadmap, Task Force put out a great study by the Australian Bureau of Statistics that shows that there's, I think, there's $28 billion worth of potential in digital fintech services exports, and that's been recommended to become a key export priority in that report. What that means is that there's an argument in government that that's bigger than mining or tourism exports for Australia. And so for the first time, we have a government that actually sees that technology and digital and our ability to provide a highly regulated and trusted environment could actually all kind of come together for economic gain. And they're very supportive. And I think this is why we've got programs like the National Blockchain Roadmap, which I think the government sense are quite innovative, and why we've got a lot of other really interesting activity. But as for the government's actual position, I can't comment on any of that. All I can do is observe that behaviour.
I'm not really sure there's anyone here that could comment on what the government is actually doing or thinking, and indeed those of us who are involved with the roadmap, we're involved as private individuals. We don't represent the views of the Australian government, nor do we represent the views of the department. In fact, that's kind of the beauty of the roadmap, is it's a collective of people who are involved in this space being able to get together and actually say, this is what we are seeing, this is what we think is important. And Australia has an advantage in a way in that we are very much a middle power, we're highly regulated, but it means that if Australia can do something, we can do it well. We're trusted and respected around the world. And so part of the reason why there's this focus on technology is traditionally we have very much been a quarry and a farm. And there is a view that Australia needs to change, but that's something kind of yes, but that's something that's happening around the world. Is there's a view of we are moving into this sort of innovation and information-driven age and data-driven age, and how are we going to take advantage of that? Well, projects like the roadmap, which has actually come out of the Department of Industry, not Treasury, so it's not just financial services. This is how can you implement this in energy? How can you implement this in resources? How can you implement this in telecommunications? Where can you use new technologies to push existing industries forward? As much as it is saying we have certain industries which are already data-driven, such as financial services, clearly there are synergies there, which we're already looking at. And the whole idea of what's Australia doing? Well, we've been looking at this for a while. The fact that all the people here have been participating in this industry for quite a while at a very sophisticated level is something that's quite different to elsewhere in the world. The Australian government is probably one of the first governments that actually looked into what is Bitcoin the Senate in Australia started looking into it in 2014 and published a report in 2015. The CSIRO, the government science body, Mark Stokes is here today, started looking into it around the same time, published reports in 2017. Now that shows that it's been on our radar at a sophisticated level for quite a while, and we're kind of at that next stage now. It's gone beyond what is Bitcoin, how is it treated, what are the assets, what are the digital assets. It's now, what can we actually do with the technology? And how can we make it work? And how can we implement it? And where are the opportunities? So what's the government doing? We can't speak to exactly what they're doing, but we can say that there's certainly a favourable view out there as to the implementation, application of new technologies, and blockchain and DLT is certainly up there.
Sorry to interrupt, that's okay. No microphone needed. I can advise you. What I can say is that what the government is doing is they're looking to work out some tax strategies to tax investments in Bitcoin, just like anything else. So they are onto that, and just please be mindful.
If only they would accept Bitcoin when we pay our taxes.
You work for the ATM?
No. It's okay, I'm not going to say.
Okay,
It's safe here.
We can go into current legislation on how it's currently being treated, and it's currently treated as capital gains and asset like property. So thank you for that, but until there's actually some proper information coming out from the government,
Yeah, well, that's what I'm saying. Just
hearsay.
please be mindful because they're onto that. Yeah, so get in quick, make some profits, and get out before the tax comes in.
That is
You're already being
That's
taxed. You are already being taxed. So if you're doing this and you're not getting taxed, you're not reporting it to tax, then I'd probably be concerned about other aspects.
It's very good that the camera is pointing this way at this point.
I mean, I'll just make a very quick comment on that. But I understand that a very large percentage of Australian cryptocurrency transactions are identified to the individual involved. So I certainly wouldn't rely upon the pseudo-anonymous nature of it for avoiding that.
Yeah, agreed.
That's a good segue for our next trend, which is central bank digital currencies. And there's a question from Tina from Meetup as well, and she asks, when a government embraces blockchain technology and creates its own virtual currency, what are the positive and negative impacts on Bitcoin and Ethereum circulation? But I would like extrapolate that. What are the positive and negative impacts in general? Because that comes to some of that broader implications. And who wants to go first?
Sure, I guess. They're different. So obviously a CBDC is a government-managed currency, much like fiat currency, and it has the properties of that. So if you want a safe and regulated sandbox to play in, where you want the government to be able to intervene and protect and enforce regulation, and that's what a CBDC is going to be great at. You're also going to be obviously giving the government and trusting the government to have a lot of information about your financial transactions, which is how the default system is meant to work. Obviously, cash notwithstanding. Obviously, a currency like Bitcoin is nominally not actually decentralized and also censorship resistant and fragile. Therefore, there you are saying, well, I'm going to put my big boy or girl pants on and be responsible for my own money, and nobody can stop me. And so, I think the inherent inability, or the idea of the inherent inability of anyone to stop that network from existing or stop it from being used makes it very different from a CBDC. And so I think that they'll certainly influence each other. I think we're certainly going to see the rise of CBDCs. I think some people will, for various reasons, choose to continue to want to operate outside of that ecosystem. And so I think they're going to coexist in a nutshell. That's my short opener on a very deep rabbit hole. Sense.
I'm just going to make one quick comment because I could talk about this one for hours and I won't. When we talk about central bank digital currencies, there's a question as to what we're actually talking about in terms of the model. It's it's not necessarily like fiat currency. It is fiat currency. It's money of a government which is structured in a different way. Now, there are a number of different models of central bank digital currency that are out there. There's ones which are retail, so that's like cash. Anyone can access it. And anyone has that claim then on the central bank. There are others which are wholesale, which are more like our current system where the only people who have claims on the central bank are actually the large exchange settlement account holders. They're different models, and the reason why you go with one or another, there are a number of different things. And some of them go down to what extent is your current currency digital? Do you have digital payment rails? Now, in Australia, we've got the MPP, we have immediate settlement of payments at the retail level. There are many countries around the world who are very sophisticated that don't have that. So they'd probably be looking at it for a different reason to say perhaps in Australia. There are one of the main reasons that people look at this, for instance, is the concept of programmable money. And that's the idea of saying, well, let's take the actual settlement asset and let's connect it to the transaction itself. It's something that people have been doing with Bitcoin for quite a while now. So they said, well, why don't we do this with normal money? Because we don't want the volatility. Another reason why you may want a central bank digital currency, but if you're going to create something which is literally another form of money, you've got to think about it like money. It doesn't get treated and this doesn't get thought about in the same way as Bitcoin or ETH. This is going to be the same as cash. It's going to be the same as the money in your bank account, because if it isn't, it's not going to be money. If it's subject to hyperinflation, it's not money. It's not a store of value. It's not a unit of account. It doesn't work in the same way that it needs to. So, could these potentially be a game changer? Yes. Are they potentially going to be a game changer for cryptocurrencies or digital currencies or crypto assets? Possibly not, because you're probably dealing with different parts of the economy and different use cases. Are we taking a lot, or would people be taking a lot of them looking at a central bank digital currency from the crypto ecosystem? Oh yeah. I mean, I don't think people started looking at this really until Bitcoin came about. But if we are looking at central bank digital currency, it's money. And it's going to operate like money, which means in some ways it's probably going to be much more boring than people might think.
I mean, they'll probably compete with each other, but like they'll probably compete with each other, but virtuously, right? It's like a zero-sum game. So, you know, the more you bring in CBDCs, the more comfortable everyone gets with currency being digital, the more everyone uses all forms of digital currency. So I don't think it's like, you know, one wins and the other doesn't. I don't understand that narrative. You know, and of course it's a really two-edged sword. Like there's the whole bit of interest rates thing, which we very briefly touched on before. You know, if you have cash, it acts as a natural buffer against negative interest rates, and you can't introduce them because people just get cash and put it under their mattress. And so there's been central bank discussion around the idea of having an exchange rate between paper cash and digital cash, so that you can't do that, and a whole bunch of other things. So like in the end, you're going to have managed economies and managed currencies, and you're going to have unmanaged currencies that have their own economies, and they're going to coexist. So.
I'll add one thing. In Switzerland, I think it's like cash transactions are like less than 10%. Not the case in Australia. Not at all. Actually, during COVID, we pulled out more cash than ever before. There's about 56 or something $billion under, who knows, is it on the black market? Is it under people's mattresses? We have no idea. So
143 billion.
There you
Friday.
go. Right, as a Friday.
Up from 3 billion, and it was 143 billion Friday.
Right, there you go. And that's the thing,
Must be
right?
people
So
converting that crypto.
Respond to one point you made there. In Switzerland, it's very cash-based, so, as a lot of many countries are, and so is Japan. They actually only do technology. Countries that have historically started wars with neighbors don't trust their central governments. Therefore, Korea is all credit card, Japan is all cash. Germany is all cash, Switzerland is all cash, and France is all credit cards. That has nothing to do with technology, because people don't trust their governments. Well, I guess that has to do with technology.
This is it, right? Exactly. So when we sit in the Western world and when we sit in America and Australia, we take, you know, we look at it from a speculative perspective and et cetera, but not the case in many other places.
Actually, I very much disagree with the idea that CDBC is very similar to fiat. I think it's actually very, very different. It's a paradigm shift in terms of what CDBC is and what fiat is. Because most of the money that's created in the world, I think something like 97% of it is created through debt. When CDBC is introduced, that is an actual bearer instrument, and that is not debt. So I actually see, and I don't know what happens, but when the central bank started issuing CDBC, I would like to understand how that would impact fiat. How would it impact actual banking system right now? How would it impact CDA? How would it impact all the banks, retail banks that currently is issuing debt? So that's actually my question. And the second part is actually how CDBC immediately is going to impact stablecoin.
That's the real question. I mean, I think it competes with it's not going to affect crypto at all. Like it's apples and oranges. Crypto, no one cares about CBDCs in crypto. It just doesn't. But stablecoins, on the other hand, potentially CBDCs can use, instead of certain stablecoins, as the backing for assets when you convert them into, back into fiat. But I don't think that's going to happen either, because most of the exchanges and most of the people that interact with decentralized financial applications won't be using anything that's the CBDC. Lots of the stable coins that exist, like DAI, Tether, the most popular ones, they're pretty decentralized. And there's lots of reasons for that. I think with CBDCs, there's a lot of barriers to entry, and then also probably will prohibit people in crypto from potentially using them to on-ramp and off-ramp. Like a lot of the stable coins were created because there was no way to do on-ramps and off-ramps back in the day. Tether was the first one, the innovator. MakerDAO in the Ethereum ecosystem made DAI for that specific reason as well, so that it can be used as the block for all the other financial applications that were built on top of it. So, I mean, look, I don't know the specifics about CBDC, but if it is a bearer bond or not, but I don't see why it couldn't be fractionally reserved like everything else in the fiat system. Why can't you print it the same way you can print it, when you can print dollars now, just digitally print it? I'm not sure. I actually don't know that the answer to that. If it's only a settlement layer, like you're saying, where it's just one-to-one backed and only backed in that one as a bearer bond, that's different. But I don't know that it could do that, because then it's actually the tools that it would want to implement can't be implemented. Like even what Rob was saying about getting rid of paper currency so that you can get rid of negative interest rates quicker, or go to negative interest rates quicker, right? Like you can't do that if it's a bearer bond. So I'm not sure how that's going to work. I mean, Hannah might have a better idea. But
basically, all our money is digital, right? So it's just taking it from a mainframe, putting it on blockchain. But you see, when you talk about paradigm shift, you are right. People are afraid of that paradigm shift. Because right now, I can go to that bank account and I can withdraw cash and I can spend it on anything I like, as long as it doesn't hit the FBOS or a cash register. I can go down that street, I can buy this, I can do that, I can do anything. Cash, right, is an asset that the average day person uses. Cash is what every average day person puts under their bed.
it's the real bearer.
So if you think that there's a paradigm shift, the paradigm shift is every average person feeling extremely afraid, especially in a country like Australia, where you've got something like Inju card, right? So now the Inju card, and they can control where you can spend your money, so you can't go to the farmer's market anymore. You have to go to college. You can't go to IAG anymore. So people are afraid of this. So you are right, there is a paradigm shift. And when they come into play, where are people going to go? Where are the people going to go that want to take the $50 cash out to buy a hit? They're going to go to crypto, and they're going to go underground to it, right? So there will be a paradigm shift, and there is a paradigm shift, and this is the biggest reason why the average person that I talk to who's not into crypto, is afraid of cryptocurrencies because they see it as a tracker, right? So there is paradigm shift, I think, around that.
Get your drug dealer to accept crypto.
That means you're chemist.
A public unencrypted ledger, you can like your drug dealer and privacy friendly to do
Can I just say, all of this stuff that we're talking about here and your comment about the paradigm shift, these are all retail models. That's when you get into the concept of the model of the money that you're creating, the model of the central bank digital currency. When you're talking about it's different to fiat, it's got to be fiat because the fiat currency is the currency of the country. That's what it is. It has to be another type of fiat. It can be structured differently, but it's going to be fiat. And so, yes, 100%. What does it mean from an economic perspective if it is a retail CBDC that gets used the same way as cash and as a bearer instrument? You've got to think through, well, what is the broader economic implication of that? Or you say it's not going to be a retail asset, it's only going to be available in the wholesale environment. And then, well, why are we putting that in? Because, as you said, money's digital anyway. So then there's a lot more to this than it's just we can create something on a blockchain and let it go and see what happens. There's a huge sort of paradigm shift, but it will be completely different depending on what model you implement, depending on who can access it, what it can be used for, how it can be accessed, and also to make sure you do have that financial inclusion perspective. Because if we suddenly create something that means you can't go to your farmer's market, well, that's a really big problem because that's a huge part of the Australian economy you just shut down because you wanted to be able to control certain aspects of it. Now, illegal activity aside, I'm talking about genuinely legal businesses. You've got to make sure that whatever it is works for society. So are we going to say, yep, CBDC tomorrow? No one's going to do that. No one can do that because money is fundamental to the operation of any economy, no matter what structure it is, no matter how it operates. That's the idea of it being a means of exchange means that it has to be a means of exchange that is widely acceptable as it is made.
You pay your tax, and it's one of the big subjects. I would like to propose that we move this conversation to the public. Otherwise, we're not going to talk about any of the
we have 5 more minutes, and I think we only can cover one more trend, which is DeFi. 5 minutes. Okay, that's a challenge. Okay, what the hell? How do normal people can wrap their heads around DeFi in 5 minutes?
Imagine that all of the crazy financial instruments that ever existed before are now composable like Lego blocks that plug together, and people are rapidly creating new ones all the time that have never existed before, and that's DeFi. They were done with the above.
Yeah, so basically, I guess, DeFi the biggest use of DeFi is yield, right? So it's interest. So it's yield farming, you're getting interest on your Bitcoin. Another thing for our tax friend up there, back there.
I think it's easy.
So it's basically the interest and yield, right? So that's kind of what we're seeing happening there. Look, the biggest thing that's happening in DeFi really at the moment is movements in DeFi. At the moment, everything's running on Ethereum. Ethereum gas prices are through the roof, killing a lot of people. You've got Binance Chain coming up. Binance Chain at the moment has gone through the roof in the last couple of days. You've got how many? So I think the DeFi space, and then when we talk about the bubble,
Polkadot's coming as well.
yeah, it's a Polkadot, right? It is so big, and the reason it's big is because it's of the yield farming, right? So it's really kind of doing there is taking a lot of, it's all the crazy things, but it's also taking the normal financials, fintech stuff, and really blockchainifying it.
And making it more complex, right? And more instant and more real time. So now you can anyone can make complicated financial instruments now. Anyone can create an economy now. We have these tools to be able to do all of this stuff, and that's fascinating, and it's moving at a million miles an hour because it's no longer being done in regulated markets, right? And so DeFi is a huge theme. It's a huge theme in 2021. It will continue to be. We're only at the very beginning of that, and look how much it's done so far. And right now, it is a lot about yield farming, but I think we'll see a a lot of infrastructural things coming out, like real-time regulated markets, all sorts of stuff starting to come out in that space.
Okay, so what are some of the things that new investors can do to avoid falling to DeFi scams?
Oh, I don't know. I mean, just avoid scams from start.
Yeah, but how do you identify them? Are there red flags?
Okay, so I'm the sophisticated investor, and George, you are too, I think, right? And,
Well,
we-
investor.
So when we say sophisticated, don't mean in terms of our taste, but in terms of
Yeah, they have poor taste.
very poor taste. So
Basically, normal pride figure viewers of the
I have conversations with other people who are, for example, who advise banks or advise economies, who do all sorts of things that are very sophisticated. And we joke to each other that DeFi is just a really good way to lose money in ways that you've never discovered before. And then we go in and do that anyway because we want to discover exactly how that really complicated financial product will lose us money in a non-obvious way. So what I would say is that there's a great old finance book called The Richest Man in Babylon.
Oh, yes.
Very easy to read book. It's sort of like an allegory of a guy in ancient Babylon who makes wagons, and it uses that to teach you basic financial principles. And one really important financial principle that it says is don't invest in something that you don't understand. DeFi is very complicated even for people who have spent, like me, 12 years or so in the space and who have spent a lifetime in disruptive technology, making software, dealing with all this stuff. Even I don't understand all of it. It constantly is moving. It's impossible to be an expert in it. So don't be, the idea of thinking that any of us really understand all of what's happening there is crazy. So, go into it with a healthy attitude of adventure and discovery. Don't go into it thinking it's a get-rich-quick scheme. It may still be a get-rich-quick scheme, right? But risk and reward are very tightly related. Right.
I mean, the first people that got education got it for free, and how much are we paying? That's a Ponzi scheme, guys. Life is a Ponzi scheme.
If there's yield farming, right? Let's take a really, really simple and very short example of this. Let's say you just have the classic service node or master node project, right? So, I'm Bob and I'm going to make a Bob coin and I'm going to set up a bunch of servers and you can stake some currency onto those servers and then you're going to get a certain amount of reward regularly. Great, that's like free money, right? Because of course everyone is getting that, selling it, and they're dropping the price of that. So as with any startup, as with any financial system, the value being created has to be larger than the value that's being extracted or it's going to go down faster than it's going up. So in all of these things, the real question is where is the value accumulated and how? And if you don't understand that, then you don't understand how to make money out of it, right? You might win in the short term, but you'll have the same problem that hedge funds have had, and why Vanguard Index Fund is so successful, which is that over the long term, index generally beats managed funds most of the time, because it's really hard to beat the market exponentially forever. And I think I'm
Let us add really quickly. You'll see some interesting stuff. There's already interesting stuff happening in regards to, as we said, getting interest. So things like Celsius Network and things like that are being used by average day people. You're also seeing companies looking at loans and loan investments and things, giving loans based on crypto assets and stuff as well. But all I would say is, apart from DeFi, which is in kind of my space, NFTs. NFTs are kind of going through the roof at the moment. Are NFTs or fluff? Are they or not? Well, is it all a little bit fluffy? So that's an interesting thing. You've got your stake proofs, right? So that's happening with Dano, stake pooling, and all that's kind of getting big there. But the other really cool thing is zero proof knowledge. If you've got some time, have a look into that because that is actually the future of crypto, and I'm calling that future.
Yeah. We have a question from the audience, from the stream. Quick question from the stream, from David Jones. Gas problems seem to have fueled explosive influx in BSC, so Binance Smart Chain, as you were saying, but BSC seems like a walled garden. Polkadot as a viable alternative?
I think so, yeah. I'm not a BSC, I agree, 100%. It's a walled garden. I was having a chat with some of the European crew that I do work with. Some of them are in love with it, and I feel it's a walled garden. I actually I'm really into the block ecosystem.
I mean, there's solutions coming to Ethereum as well. L2 solutions there's many of them. There's Matic, there's Loopring, and they're all very usable now, and they're growing. And so like, yes, it's a problem now, but it's a good problem. It's because it has congestion because it's being used a lot by a lot of people for a lot of different things. Is it unusable for small retail guys? The gas fees are super expensive. Getting transactions to go through could be very problematic. When you're doing yield farming plays, getting in and out of things can be problematic, but solutions are coming there as well. So I think what you're going to start to see is less about, is ETH dying again? Can we go to other solutions as well? Layer ones, I think there's going to be layer ones that work as well. There's going to be DeFi interoperability between those platforms. The reason why I'm saying that is because you're seeing things in Cosmos and Polkadot where lots of projects are building on top of them, particularly DeFi projects. So those projects will probably wind up being interoperable, where you'll see some of the Ethereum projects putting pools and assets into one, and then others coming over to the other one as well. So like, I'd say like, yeah, Polkadot's there, but like, this isn't going to be a permanent problem for Ethereum potentially. It shouldn't be, but Ethereum still has to figure out how it launches ETH2, which could be problematic. That's why a lot of these other layer one solutions are starting to catch bids again, and people are looking at them. And but you're not seeing yet, and like this would be the real trend to be worrying, is not many devs are leaving the ETH environment. Not many projects are leaving the ETH environment. There are some, but it's nothing to even write home about at all.
Very briefly, because of the network time, Ethereum has the network effect on its side. And that counts for a lot. Bitcoin has a network effect on its side, and it counts for a lot in the sense that with memes. But also, we're entering the era of interoperability of cross-chain. And so, like, for example, there's a lot of really cool projects coming out of Polkadot. One of those is a project that will allow you to run an Ethereum smart contract on Polkadot. Right? So, I think we're going to certainly see a new world of everything being able to talk to everything else. One of the trends that is related to that is that now I think a lot of liquidity is moving to synthetic stablecoin assets over Bitcoin on exchanges. Why? Because they're there, right? Like I was laughing before about CBDCs because I'm like, well, probably they'll just be like, made into synthetic assets on a bunch of exchanges and indexes and traded there, right? So it doesn't matter what anyone thinks, you can make something synthetic on a decentralized network with anything and trade it. So, we're going to see the rise of interoperability, and so in a sense, that's a really complicated question, right? Do you want to say something before we wrap up?
I'm certainly not the right person to talk about protocols, and if you thought I was, then really these guys know way more about it than I do, and you should be listening to them. Just on the DeFi thing, I will say, be careful. Like, the number of people who are seeing this as just an opportunity to get rich quick, it's not. I mean, I think you used a really good term before, which is these are complex financial products. Actually, a lot of them may well be complex financial products, and complex financial products in the regulated space have caused catastrophic damage. This is seen to be unregulated. And I'm saying that because we don't know, we haven't worked out, we don't know what's happening there. But be careful. Like, assume that whatever you put in there is a chance you will lose all of that and possibly more because of the way that these are structured. This isn't like you put in your money, you buy your Bitcoin, Bitcoin goes to zero, you lose your money, or the token, whatever ICO project it is. This is something where there are obligations to put up capital in the future. That then means you have to give more money, which means you may lose more money. Like, I know this sounds really silly, I know I'm being a conservative person here, but it's just, you've got to think through this. When you're in the space, it's so easy to think about this as it's an asset, it's investment, it's all that, but there are so many risks. And just be willing to, if you're going to do it, recognize that they're there.
I agree, you should be careful when you're looking into DeFi assets, but if anyone has anything that they need, you can pay for my masterclass.
That's the other big thing that you're going to see. privacy coins. So cash was kind of like it was going to be dead for a while there, but it's coming back. I don't think Monero is a true privacy coin, but I don't think cash is a true privacy coin either. But I think that we will start to see possibly some more privacy coins.
As a follow-up to Rob, what project was it on Polkadot that allows you to do the Ethereum?
That's a really good question. The amount of information that passes through my brain every week is I've forgotten the name of it, but I will give that name to Adriana, and she can follow
sure.
that person.
We'll reply to that comment once we find out.
So John Bogle, the guy that created Vanguard, famously said that the more complicated a financial product, the more it enriches the financial sector and not the people who are using it. And so I think that trend will probably, maybe we can call it Bogle's law and apply it to DeFi. On a closing note.
All right, do we have any final questions before we end the stream? We are good? All right. Thanks to our panelists, Hannah, Rob, Aimee, and George. Thank you all for coming. We'll see you next time.
When is next time?